question. The brave Chris Grisanti is here. He's chief market strategist at Mai Capital Management. I shouldn't say brave for buying Nvidia, but for you, you know what I mean.
Sure.
To step into a name like this at a time when it might have further to fall in this kind of correction back towards, I don't know, some semblance of what is now going to be normal.
Sure. So we're actually, as value investors, are actually happy to see this fall, not just because we get it at a cheaper price, but also it's healthy for a stock that's done so well to really give back some of the frankly abnormal gains. You have 100% in 6 months, and then give us a more reasonable entry price. But like you said, Kelly, if you do the math and forget about the name, cross the name of Nvidia off the chart and just say, here's a stock that's selling at 26 times, again, about in line with Coke or Procter & Gamble, but is growing at 30% next year and 20% the year after that. And those are fairly reasonable assumptions. So that's what makes us interested, and that's what checks our boxes. And it's also called Nvidia.
Not to mention it, correct me if I'm wrong, they announced a $50 billion buyback in the last earnings. That is a massive support, you'd think, to the name. But even those 20 to 30% growth estimates, you'd think easy for them to achieve at this point. But what if we have some kind of economic pullback combined with a reset after people have been ordering so many of these chips and maybe think, okay, I've stockpiled and now I don't
I guess I'm not so afraid of that because they're not selling to consumers. This isn't Amazon. They're selling to Microsoft and Amazon AWS because these are businesses that are building out AI infrastructures that are huge.
Stockpiling, and are they not?
Right, they're stockpiling, but they can afford, even if the economy goes south, they have long-term plans and they have the cash to continue to fund it. What I would be worried about, like Seema was saying, was possible competitors, but we really don't see that yet. And I also totally agree that this antitrust thing, which is driving the stock today, is an opportunity because it won't be settled. It'd be like talking about the iPod today, that there was a case 15 years ago about that's what's going to happen.
So on the valuation piece of this, 26 times tells you that if the stock still is that interesting in terms of its growth potential, why is the market assigning such a low forward PE? I mean, it's almost as if it's saying we know this is an inherently cyclical business.
Right.
We've been through these ups and downs before. This might be the latest and greatest, but it's not going to be immune from this kind of volatility going forward.
Sure, I think you're putting your finger right on it. But I think that the market has a somewhat antiquated view of the semiconductor business. I like to say that semiconductors are to the 21st century what oil was to the 20th century. You cannot have a thriving digital economy without them. So I think that they are less cyclical than they were 10 or 15 years ago. And I think AI is just this huge tailwind that can certainly get Nvidia through the next 2 to 3 years.